So, serviced accommodation operators, today's YouTube video is all for you guys. We're going to be running through the VAT side of serviced accommodation, giving you the key information you need to know so you don't fall foul and end up paying more tax than you ought to. But for people that are new to this video, please make sure you are giving this video a thumbs up and hitting that subscribe button and turn the notifications on so you get notified as soon as we post brand new awesome tax saving content. So, serviced accommodation and VAT, what do you need to know? So the VAT limit, well, the VAT registration threshold in the UK is currently £85,000. So when you make taxable supplies that exceed this amount in a 12-month period, so any rolling 12-month period, when you make taxable supplies that exceed £85,000, you will need to register for VAT. The standard rate scheme is one that mostly applies. It's basically the default VAT scheme for businesses, and it works quite simply in that you charge VAT at 20% on your nightly stays, but you can reclaim VAT on all of your inputs. This isn't usually favoured by the service accommodation sector unless you are going after the corporate market, because you can charge VAT on your nightly rates and those guys can reclaim it. So it doesn't make any difference when you start charging VAT to them. But if you compare it to the holiday market where customers can't reclaim the VAT, you're essentially 20% more expensive than your non-VAT registered competitors. And also, if you are going after the rent-to-rent market as well, so you've got all of your properties on a rent-to-rent basis, the rent you pay to your landlords doesn't have VAT on it, you can't reclaim it, and that's going to be your biggest cost. So the standard rate scheme is going to apply as default unless you can look to register for the flat rate scheme or TOMS. So the other option is the flat rate scheme, and this is favoured where TOMS doesn't apply, simply because you can still make VAT invoices. The customer basically is getting the VAT, they're showing the VAT on those invoices, but rather than you having to track your inputs and your outputs, you basically pay over a flat rate of your VAT inclusive turnover to HMRC. Usually the flat rate for the hospitality sector is about 10.5%. This does vary occasionally. So you'll pay 10.5% of your VAT inclusive turnover to HMRC, and that's it. So you'll need to look at all of your inputs and your costs as to whether the standard rate scheme or the flat rate scheme is going to give you the best VAT outcome. And also, when your business grows, you might not meet the thresholds and the criteria of the flat rate scheme. So lastly, we're going to go on to TOMS. TOMS is the biggest one in the serviced accommodation sector because it's probably the most valuable in terms of the tax savings that it can bring. So where your supplies are actually caught in TOMS, you don't essentially have a choice. If your supplies that you make are caught in a TOMS, then you have to account for them under TOMS. But obviously with serviced accommodation, you can structure your agreements, structure the commercial circumstances to fit the VAT side of it when you're aware of it, whether you want it to be basically a materially altered supply so that it falls outside of TOMS. You do have this flexibility, and your professional advisors will consult you on that. TOMS is a very, very specialist area. The vast majority of accountants aren't fully aware of it. Very few chartered tax advisors are. Thankfully, JSM, we are one of those that do understand TOMS and how it applies. So it applies quite simply. Usually for VAT registration purposes, it's your total revenue that counts, that 85,000. So as soon as you get £85,000 in bookings from Airbnb, booking.com, you've got to register for VAT. But if your supplies are caught under TOMS, rather than it being £85,000, it's your gross margin. So we take away all of your direct costs, such as rent paid to landlords, and say, for instance, you've got £150,000 worth of turnover, £75,000 worth of direct costs. Your gross margin is £75,000, which means you do not need to register for VAT just yet. You can continue as you are. And then when you are registered for VAT, when your gross margin, basically your turnover for VAT purposes, exceeds £85,000, that's when you have to register for VAT. And then rather than charge having to pay VAT and charge VAT on your total revenue, you just charge on your gross margin, so there's a VAT saving there. And of course, you can still recover the VAT on your general overheads, so it can really be a tax efficient scheme to be on, and to basically make sure your supplies fall within TOMS to help you pay less in VAT. Again, it's worth noting that the VAT side of it, when it comes to tax, is incredibly complicated, so make sure you do take specialist advice. You can't implement any sort of VAT planning based off YouTube videos. Speak to a professional advisor like ourselves, because that is going to be the only way you can be 100% sure you're on the right side of HMRC. So on Monday, we're going to be talking all about the taxes you need to be aware of when transferring properties from your own name into a limited company. This is a hugely popular topic at the moment. Many people have been asking, all of the subscribers have been messaging me saying, can you do a video on this, Josh? And yes, we are going to do it. So Monday at 7 p.m, we'll be producing the brand new video all about the main taxes you need to be aware of when selling properties from your own name, whether that's your main residence, your buy-to-let investment property, and transferring them over to a limited company. We're going to run through some of the factors as to whether you should even do this form of planning or not. It's going to be an absolutely fantastic video, lots of knowledge in there. Make sure you're subscribed with notifications turned on so you get notified as soon as we go live on Monday at 7 p.m. Cheers for watching, guys. I hope you found this video useful, and I look forward to speaking with you all soon. Bye for now.